Hello and welcome to the Retirement and Money Show. So today we're going to look at something a little bit different, and that is why I don't think you always need a financial advisor at retirement. So here's a number that might surprise you, and that is according to the FCA, who are the Financial Conduct Authority, well, their latest retirement income data says that around 30% of people take regulators' advice when they first access their pension. So what does that mean? Well, it means 7 out of 10 people are making their decision without actually paying for any professional advice. But the thing is, get this wrong, and you could end up paying thousands in unnecessary fees or make a mistake that's going to potentially cost you your retirement. So, if you've got a DC pension and you're wondering whether to pay for advice or not, or to whether to go it alone, this video is going to help you. What we're going to do is we're going to cover what advisors actually cost, how those fees compound over time, and also what the free options are that most people don't know about but you can access, and the generic advice problem when you genuinely need to get professional help, and how to know which camp you're likely to fall in. So by the end of the video, you'll know exactly whether you need to pay for advice or whether you can actually manage this yourself. And do stay to the end, because there's one thing that I'm going to tell you that's going to tie all this together. I find that a lot of people tend to miss when they retire. So my name's Saki Hussain. I've got over 25 years experience of helping people plan for their retirement. So let's start with what financial advisors actually charge, because I think this is the bit that often catches a lot of people off guard. And that is, most advisors charge an initial fee of usually between 1 and 3% of the value of your pension pot, just to set things up. So on a £250,000 pot, that's somewhere between £2,500 and £7,500 before they've actually done anything to get going. Then there's the annual fee. That's typically around 1% of the value of your pot, and that is charged every single year. So on that same £250,000 pot, that's £2,500 a year, and you pay that year after year, or basically as long as you stay with them. Now, here's where it starts to get really expensive. Think of that 1% annual fee as what I call a compound drain on your retirement, because it doesn't just take money out of your pot, it takes money that you would have had growing for you if you still had it invested. So, what does that mean? Well, over 20 years, that 1% annual fee can swallow around 20 to 25% of your total wealth. So let me put that another way. On a £250,000 pot, you could be handing over £50,000 to £60,000 in fees over the course of your retirement. So I'm just going to say that again. On a £250,000 pot, you could be handing over £50,000 to £60,000 in fees over the course of your retirement. Now, clearly, that's not a small amount. That is years of potential retirement income for you. And the bigger your pot grows, the more you pay, even though the work involved doesn't increase. So the question you need to ask yourself is whether you're getting value for that money or whether you're paying for something that you could actually do yourself. Whenever I talk to people about advice at retirement, what I find is there's things that people just don't realize. And that is that there's actually a huge amount of free help available, and it's getting better all the time. So the first one to know about is something called PensionWise, and this is a government-backed service that's completely free and impartial. So if you're over 50 with a DC pension, you can book a phone, online or face-to-face appointment. So what happens on those appointments is that they'll explain all your options, the tax implications, help you avoid scams, and what questions to ask of your pension provider. So nearly 9 in 10 people who use PensionWise says it helped them understand their options much better. Then, of course, there's your pension provider itself. Now, most providers will offer free guidance, retirement calculators, and something called investment pathways. Now, investment pathways were introduced by the regulator to give you simple, ready-made investment options based on what you want to do with your money over the next 5 years. The thing with investment pathways is that you don't need to pick individual funds or, importantly, pay an advisor to choose them for you. And there is more stuff coming. And that is, the government is introducing something called targeted support. And this will let providers give you more personalised guidance without crossing into regulated advice. Now, this is really important because this is designed to fill the gap between free guidance and expensive advice. And Money Helper, which is another organisation you may or may not have heard of, well, they also offer free pension guidance over the phone, online and face to face. And my experience and feedback I've had for them has been really, really good. And for a lot of people with straightforward situations, I personally think a lot of these free options are generally going to be enough for you. Now, here's something I've seen time and time again in my experience. And that is a lot of the advice people pay thousands for is actually surprisingly generic. So what happens, you sit down with an advisor, they gather all your information, they run it through their software, and you get a report. And I've seen a lot of these reports. And often what I tend to find is that you're actually just getting a templated financial plan with your name on the top, with a little bit of personalisation throughout it. And I tend to find that the recommendations can be quite broad, the investment portfolios are often off the shelf, and the annual reviews often amount to a letter saying, stay the course. So I call this fee camouflage. So this is where complexity in a portfolio is often just hiding the fact that there's actually nothing special going on or nothing highly personalized to what you are getting and therefore for the fees that you're getting paid. So in my opinion, this is something that the advice industry needs to look at because you're paying 1% a year for someone to tell you to keep doing what you are already doing. Now, I do want to be fair here. Good advisors do absolutely exist and they earn their fees many times over for the right clients. And for some people, using an advisor is absolutely the right thing to do. But the reality in my experience is that many people with simple situations, with not a huge big pots, are paying for expertise that they don't actually need. So if you've got a single DC pot, no complex tax issues, and you're happy with straightforward drawdown strategy, you may not need to pay for ongoing advice. And the key question is whether your situation is simple or complex, and we'll come on to that. Now, there absolutely are circumstances, as I said before, when you do need advice. And I think it's really important to be clear when professional advice is really essential. Well, the first one is if you have a defined benefit pension or a final salary scheme, which is worth more than £30,000 in terms of its transfer value, and you're thinking of transferring it. In that situation, you are legally required to take advice. So this isn't optional, it's the law, and it's there for good reason. That is because defined benefit pensions offer guaranteed income for life. And giving that up is a huge decision, and that can go very, very wrong, and it has gone wrong for thousands of people. The second one is if your pension has something called a guaranteed annuity rate attached to it, and you need advice before cashing it in. Now, these guarantees can be extremely valuable, and I think you'd be foolish to give them up without fully understanding what you are losing by giving them up. The third thing is, if you're a higher or additional rate taxpayer with a large pot, the tax planning can get generally complicated, and this is where I always recommend you do speak to an advisor. And things like pension recycling, the tapered annual allowance, and money purchase annual allowance can catch you out if you don't know what you're doing. And again, this is where advisors can be helpful. Moving beyond that, the fourth option is if you've got multiple income sources, such as through property, business assets, or even if you've got complex inheritance tax planning needs. This is where an advisor will genuinely add value. And lastly, if you simply don't feel confident making these decisions, just ask yourself, would you like that peace of mind? And if you would, that using an advisor is absolutely a legitimate choice. In my experience, I find between 20 to 30% of people have situations complex enough to genuinely benefit from ongoing advice. And the other 70 to 80%, well, I think they could probably manage with free guidance and a bit of their own research. But again, it comes back to whether they are willing and able to do that research and make those decisions for themselves. When it comes to making a decision, key thing is which camp do you think you're going to be in? So what I'm going to try and do is give you a simple framework that I think could help your situation. So if your situation is probably simple and you have one or two defined contribution pensions and no defined benefit pension, you're thinking of transferring, no guaranteed benefits should be giving up, maybe you're a basic rate taxpayer or your total income stays comfortably below £50,000 and you're happy with a straightforward drawdown or annuity approach. Well, if that does describe you, pension-wise plus your provider's guidance may well be enough for you. But if if your situation is complex, if you have a final salary scheme and you are considering transferring, or you're a higher rate taxpayer with tax planning opportunities, you have multiple sources of business, interest and income, you need detailed inheritance planning, or your pension interacts with benefits or other financial products, well then it may well be useful to seek help. Because in that case, paying for advice could save you far more than it's going to cost you, and it absolutely would be a benefit for you to do. So here's my suggestion. Start with the free options first. Book a PensionWise appointment, use your provider's tools, and understand your options. Then, if you realise your situation is more complex than you thought, you can always pay for advice later on. What you shouldn't do, I think, is assume you need an advisor just because retirement feels scary. At the beginning of the video, I said that there's one thing that ties all of this together, and here it is. The real question isn't whether you actually need an advisor. I think the real question is whether your situation is simple or complex. And I think most people assume they need professional help because pensions feel complicated, when actually their specific situation is often a lot more straightforward. And that assumption can cost them tens of thousands of pounds over their retirement. And every one of the free options I've mentioned, PensionWise, investment pathways, provider guidance, they exist precisely because people don't need expensive ongoing advice. So if you're in this situation, this is what I want you to do this week. First thing to do is to book a free PensionWise appointment, even if you think you already understand your options. Go through the conversation, ask them your questions, and see how much of your situation they can help with. And after that, you'll know whether you genuinely need to pay for advice or whether you can take it from here yourself. That one appointment could save you tens of thousands of pounds in unnecessary fees. So for more information, please go to our website, financialeducation.co.uk, where we've got lots of guides on drawdown and finding lost pensions and making your money last. And finally, if you did like our content, please do subscribe to the channel, and please do share this video with other people you think would benefit from this content. Finally, good luck and goodbye.